The big question, is real estate still a safe bet? Real estate, everyone seems to think it's a golden ticket. You buy a house, you wait, you get rich. Simple, right? Well, maybe not so simple anymore. Especially now, in 2025. The world has changed, the markets have changed, people are nervous. And honestly, they have good reasons to be. Uncertainty is the new normal, it seems. So, is property still that safe harbor for your cash? Or is it just a very expensive, potentially risky headache waiting to happen? Let's dig into it. For decades, owning property was the dream. It was seen as a cornerstone of financial security, a tangible asset, something you could see and touch. This belief was passed down through generations. Buy land, they said, they're not making any more of it. But times are different now, the economic landscape is rockier. The old rules might not apply so cleanly. We need to look at this with fresh eyes, not just old advice. Let's break down what's really happening out there. Peeking at the 2025 market, what's really going on? Alright, let's talk about the 2025 real estate market. It's a mixed bag, to be totally honest with you. Interest rates, well, they're not the rock bottom prices we saw a few years back. They've settled a bit higher, around 5.5% to 6.5% for a 30-year fixed, generally. This makes borrowing money more expensive. That means higher monthly payments for new buyers. It definitely puts a damper on affordability for many folks. Demand is also doing some interesting things. It's not the crazy frenzy we saw in 2021 or 2022. Things have cooled, which isn't necessarily a bad thing. Some areas are still hot, mostly cities with strong job growth. Tech hubs and places with good quality of life are still drawing people. But other regions? They're seeing prices stagnate or even dip a little. Remote work has also shifted where people want to live. Suburbs and smaller towns are still getting attention, but the rush has slowed. Inventory is another piece of this puzzle. For a while, there just weren't enough homes for sale. That's slowly starting to change in some markets. Your own four walls dream home or financial drain, buying a home to live in. It's the classic American dream, right? Having your own place, painting the walls whatever color you want, no landlord telling you what to do, sounds pretty good. And there are definite benefits. Stability for one, building equity over time, that forced savings account aspect. Plus that feeling of home is powerful, it's emotional. But emotions and finances don't always mix well. You need to be realistic about the whole thing. The biggest thing to remember is that a primary residence is a huge commitment. It's not just a mortgage payment. There's property tax, there's homeowner's insurance, there's maintenance, things break, roofs leak, appliances die, these costs add up, and they never really stop. If you're not prepared for these ongoing expenses, you're in for a shock. You the landlord now? Section 4. Playing landlord, the realities of investment properties in 2025. So, you're thinking about becoming a landlord? Buying a property to rent out. Passive income, they say. Sit back, collect checks, get rich. Sounds amazing. And yes, rental properties be profitable. They can provide cash flow. They can appreciate in value. You get tax benefits, all true. But passive is probably the wrong word here. It can be a lot of work, a lot of headaches. First, finding the right property is crucial. And hard. You need a good location, obviously, desirable for tenants. The numbers have to make sense. Purchase price, potential rent, expenses. Expenses include mortgage, taxes, insurance, and vacancies. Don't forget repairs and maintenance. Tenants can be rough on a place. You need to factor in property management fees if you don't want to do it yourself. And trust me, managing tenants can be a full-time job. Late rent, complaints, evictions, it's not always pretty. The rental market in 2025 is also a bit tricky. In some areas, rents are high and demand is strong. But in other places, rent growth has slowed or even reversed. Section 5. No keys, no problem. No problem. Exploring real estate alternatives. Maybe owning a physical property just isn't for you. The hassle, the cost, the commitment, it's a lot. But you still want to invest in real estate. Good news. There are other ways to get exposure to the property market. Ways that don't involve dealing with tenants or leaky faucets. These are more passive options, and often more diversified, which can be a very smart move in today's uncertain world. Let's look at a couple of popular ones. First up, REITs, real estate investment trusts. Think of them like mutual funds, but for real estate. You buy shares in a company that owns and operates income-producing properties. These could be office buildings, shopping malls, apartments, warehouses. You get a piece of the rental income, usually paid as dividends. And if the properties appreciate, the share price can go up. It's liquid. You can buy and sell shares easily on the stock market. Much easier than selling an actual building, that's for sure. Section 6. The waiting game. Why patience is key in property. Whether you're buying a home or an investment property, there's one word: patience. Real estate is not a get-rich-quick scheme. Not anymore. Maybe it never was. The days of flipping houses in 6 months for massive profits are mostly gone, or at least they're much, much riskier now. The market in 2025 demands a longer-term perspective. You need to be prepared to hold on to property for years, not just months. We're talking 5, 10, even 15 years or more. That's how you ride out market fluctuations. Think about building wealth slowly, steadily. Property values historically tend to go up over the long run, but there can be dips, there can be stagnant periods. If you're forced to sell during a downturn, you could lose money. But if you can hold on, you give the market time to recover. You give your property time to appreciate. This is especially true if you have a mortgage. Each payment slowly builds your equity. That takes time. Due diligence. Due diligence is also part of this waiting game. Don't rush into a purchase. Take your time. Section 7. The final take. Should you jump into real estate in 2025? So, after all that, what's the verdict? Is real estate still worth it in 2025? The answer, like most things in finance, is it depends. It's not a simple yes or no. Sorry if you wanted that. Real estate can still be a good investment. It can still be a great place to live. But the conditions have changed. The risks are different. The easy money, if it ever truly existed, is certainly not on the table now. You need to be much more careful, much more informed. If you're buying a home to live in, focus on the long term. Can you afford it comfortably? Not just the mortgage, but all the other costs. Do you plan to stay there for at least 5 to 7 years, ideally longer? Does it fit your lifestyle and your family's needs? If yes, then buying can make sense. It builds stability and equity. But don't view your primary home purely as an investment. Its main job is to be a home. The financial upside is a bonus. Treat it as such, and you'll have fewer regrets. If you're looking at investment properties, the bar is even higher. The numbers have to work, and they're harder to make work now. Higher interest rates eat into your cash flow. Rental market softness in some areas can mean lower income. You need a solid plan, a good team, if managing yourself isn't your thing, and a strong stomach. Be prepared for vacancies, repairs, and difficult tenants.